Thanks for staying with us on Point. Let's take a look at your market news now. Hong Kong stocks fell on Thursday, dragged by Tencent and Mitten ahead of earnings amid regulatory concerns, while China shares were lower led by media and healthcare firms. China's finance ministry says it sold 2-year, 5-year and 10-year yuan-denominated government bonds worth a total of 6 billion yuan. That's around $941 million in Hong Kong yesterday. Japanese shares eased on Thursday with cyclicals and oil companies leading the decline, but they paid losses after a media report that Prime Minister Fumio Kishida's stimulus package will be larger than expected. The Hang Seng Index dropping 1.4%, while the Hong Kong China Enterprises Index lost 1.8%. The Nikkei share average ended 0.3% down, but cut a big part of its losses after the Nikkei Business's Daily reported that Japan's economic stimulus package will likely involve fiscal spending of around 55.7 trillion yen or $488 billion due to huge amounts of cash payments. Let's go to the United States now. Wall Street benchmarks closed down on Wednesday on inflation fears and supply chain concerns, with investors betting that the Federal Reserve will raise interest rates sooner than expected to tame rising prices. The Dow was also weighed by Visa, which slumped after Amazon said it would stop accepting cards issued by the operator in the United Kingdom due to the high fees charged for transactions. The S&P 500 lost 0.25%, while the Nasdaq Composite lost 0.32%. The Dow Jones Industrial Average falling 0.58%. Let's take a look at what's happening in Europe. European stocks closed at a record high on Wednesday, rising for the 6th straight session as positive earnings reports helped overshadow worries that soaring gas prices were feeding into inflationary pressures. Let's take a look at those markets, commodities and other currencies. Right, let's get some analysis now. Gary Boyson from Rand Swiss joins me. Very good afternoon to you, Gary. 3 days in a row of record highs for the JSE. What's happening today?
It looks like we might not make 4 days in a row. So we've got the all-share index down about 0.3%. It's mainly driven by the resource index, and part of this is driven by Sasol, one of the big losers, down almost 4%, just on the back of reports that China and the US may at least release some of their strategic petroleum reserves. That putting the oil price under pressure and subsequently Sasol forward as well, dragging down that resource index a little bit. Also the stronger dollar not helping. Industrials essentially flat. Financials also flat ahead of the all-important MPC meeting later today.
Yeah, what do you think is going to happen there, and how keenly are the markets going to be watching that announcement in just over an hour and a half?
I think we're pretty focused on it at the moment. So it's an interesting one because we've got a very split opinion and consensus. So the economists that have been polled are almost 50-50 on whether we're going to see that 25 basis points of a 0.25% hike, or if we're going to see rates remaining unchanged. Now, it's a difficult situation for the Reserve Bank because on the one hand, looser monetary policy, will help to stimulate growth, and we so desperately need growth. The problem in South Africa, of course, is that our challenges are structural. Lower interest rates don't solve energy prices, unfortunately. So I think our base case in-house is that we probably are going to see a 25 basis point hike, and it's probably worth hiking. Just given what's happening in Turkey specifically, we're seeing obviously the Turkish lira just collapsing on the back of the idea that the president is going to reduce, is going to put a lot of pressure for them to reduce interest rates. So for the South African Reserve Bank to hike rates and just put us in a very different camp, showing the international community that we are responsible when it comes to the management of our monetary policy, I think will go a long way to helping firm up the rand, perhaps increase confidence in South Africa as an investment destination, and not damage the economy too much, because a 25 basis point hike is, in the context of what's happening internationally, fairly small.
All right. Let's take a look at some company news. We'll start with INVESTEC releasing their interim financial results. What are the highlights from there, and what's their share price doing?
So share price is up a little bit today. I think the market likes what they're seeing. It's up just over 1%. The Wealth and Invest division, they saw funds under management rising 8.6% to 63 billion pounds. Their loan book also improving, up 7.2%, but their cost to loan ratio actually also coming down a little bit, which is good, down to 64% from 72% in the last reporting period. And also obviously declaring a divvy, a nice dividend, 11p, up from 5.5p in 2021. But the real big news in the results, I think, is that they're going to be unbundling at least part of their stake in 91 to shareholders. So anyone holding INVESTEC shares will see 91 shares popping into their portfolio. They currently have a 25% stake there, and they'll be unbundling around 15%, just leaving the 10% on INVESTEC's balance sheet. So overall, I think market liking what they're hearing, and they're just showing the resilience of those upper high net worth clients to economic shocks. Things looking good for the bank.
All right, SOCO releasing a trading update. What can we expect from their results? They've given us a little bit of a teaser on what's going to happen.
So just a trading update. So not a huge amount of detail, just giving us an idea of where their sales and earnings are going to be when they do report. But just clearly, just comparing it to something like INVESTEC, banks looking so strong at the moment, but the hospitality and tourism sector still under an enormous amount of pressure. So they are expecting their sales to come in between 895 million and 1.025 billion. But that still is about half of what they were in the pre-pandemic environment, if you look at room sales specifically. So the group is still going to report a headline loss. The earnings per share loss is going to be between 12.2 cents and 9.8 cents. And overall, I mean, this is an incredibly important sector to the economy. So while we have seen it growing, and the numbers actually do look pretty good from the low base that we saw last year, if you compare them to pre-pandemic levels, we're just not back at where we should be. But at least they are heading in the right direction. The loss is narrowing and sales are picking up.
Okay, MTN making an announcement that they're exiting Yemen. It's kind of part of their bigger plan, and also selling a lot of towers. Tell us about both of those things.
Yeah, so, again, the tower deal we just saw the conclusion of, but interestingly, the Yemen deal is part of a broader strategy that MTN has had for a while to exit the Middle East. As part of their Ambition 2025 program, where they really want to focus on execution in Africa. Any business has limited resources, even a business the size of MTN, and I think getting execution right in more key markets is going to be more beneficial to all stakeholders. The idea is to simplify their portfolios. So they are going to be exiting many of the other Middle Eastern businesses, so Syria, Afghanistan, also able to be sold. But you've also got to remember, Yemen is, while it is making headlines, is a very small part of the overall group. It only makes up 0.3% of group EBITDA. So not contributing really to shareholders, but given the difficulty of operating in Yemen, I think contributing a lot of headaches to MTN. So I think market will like that business is being concluded, and I think the market is fully supportive of the strategy to exit the Middle East and focus on very exciting growth markets in Africa.
All right, and now I just really don't like being this cheesy, but there is a coffee crisis that's brewing. Tell me about that.
Coffee crisis brewing. So yes, it's actually been going on for a while. So coffee prices, Arabica, Robusta, all of them have been increasing over the last couple of years, or at least the last year and a half or so. It's one of the soft commodities that have seen the biggest price increases. And part of it has been the supply chain disruptions that we've seen internationally, thanks to the pandemic and pandemic restrictions. But this also coming really from the root cause. Sorry for that. But Colombia and Brazil obviously suffering with the frost and a drought that's taken some supply out of the market. India, on the other hand, suffering from too much rain. And Africa, while still fine in terms of supply, if we see the disruptions of supply in Ethiopia, that's going to hurt as well. So we are seeing much higher coffee prices, which is feeding into that inflation story that you mentioned at the top of the show, that brought down US markets slightly last night. The coffee beans are more expensive. The cup of Java in the morning is going to get more expensive as well. So your wallet is going to feel it eventually.
Gary Boyson from Rand Swiss, thanks so much for your time and your analysis on SABC News and On Point. It's time for a short break. I'll have more news for you when we come back. Do stay with us on Point.